Morning, everyone. We want to welcome you this morning to the sitting of the Audit and Finance Committee of the New York City Housing Authority. This morning we have a fairly abridged agenda, and as such, I want to just remind us that as we go through this meeting, we ensure that those who are speaking or microphone remains in the on position at all times, and when you're not speaking, it's in the off position. That is, the green light indicates it is on, the red light indicates it is off. This meeting will be streamed live, and as such, we expect that we speak audibly in the microphone, as I'm now doing, so that all participants online and in-house will be able to hear our discussion. We want to encourage us to ensure that our cellular phones and electronic devices are in an off position. This will minimize the disruption and interruption during our meeting. At this time, we want to have our roll call. Anil?
Good morning, everyone. Good morning, everyone. Good morning. And so we have Mr. Gonzalez, the chair of the committee.
Present.
Mr. Kaplan.
Present.
Mr. Koo. I believe Ms. Wolf is not going to be able to make it. And then from Deloitte, we have Jill Strohmeyer,
Present.
Alexander Harvey, Darshan Patel. From finance team, we have Jeff Lesnoy,
Present.
Anika Lescott Martinez.
Present.
Made it just on time. Thank you. And also from finance team, we have Ayat Lee, Amita Patel, Judith Francis, David Sunshine, and from audit team, we have Terence Clark,
Present.
myself, Anil Agrawal. From the chair's office, we have special advisor to the chair, Vilma Huertas. We also have James Seacock from our team, Frank Han. And then from law department, we have Jason Goldberg. Did I miss anybody? Okay, we have the quorum and we can start the meeting.
Thank you very much, Anil. Just for the record, Emma Wolf has submitted her apology, unable to join us for this sitting of the meeting. The first item on our agenda is the approval of the Audit and Finance Committee minutes of September 13, 2022. Is there a motion? That's been moved and seconded. Okay, thank you very much. We want to move right on to. Oh, all those in favor?
Aye.
Okay, it's an unanimous carried. No opposition. We're going to move right into the Deloitte Audit Service Plan for the year 2022, single audit. Jill?
Thank you. Good morning.
Oh, there is a face behind the mask.
Face behind the mask. Yes. Today I'm going to take the committee members through tab 3 of your booklet today, or if you'd like, you can follow along on the screen in front of you. But today I'll present to you Deloitte's audit plan for the upcoming 2022 audits of the New York City Housing Authority and Component Unit. Just a reminder to the committee members that Deloitte will perform our audits in accordance with auditing standards generally accepted in the United States of America, as well as government auditing standards, which is they're the same two set of standards that we followed in prior years as well. During our planning activities thus far, we have, as an audit team, determined that there is one significant risk for the 2022 audits, and it applies both to the component unit as well as the New York City Housing Authority. And this significant risk relates to management override of controls. And this is the risk of management circumventing controls and potentially booking fraudulent entries. And so this fraud risk, this significant risk, is consistent across all of Deloitte audits, meaning that every single audit that Deloitte performs, management override of controls is a significant risk. And this is the same significant risk that we had in prior years as well. In order to test this significant risk, Deloitte performs a number of procedures. The first procedure relates to the assessment of journal entries. We will receive what we call a data dump of all of the journal entries that the Housing Authority has entered into the ledger system during the year. Deloitte will use some sophisticated technology tools to analyze those journal entries. We'll be looking for characteristics, we call them fraud characteristics, such as even amounts, entries that may be posted on a weekend when management typically doesn't work weekends, entries that may be posted by a president, a CEO, a CFO, that typically wouldn't be posting entries into the general ledger system. Our technology also looks for keywords. Believe it or not, sometimes when someone enters a fraudulent entry into a system, they write in the description, fraud entry. And so we as auditors look for keywords like that, fraud, required to record, just certain things that may indicate that the entry doesn't have a valid business purpose. The second thing that we do to test this management override of controls is we look at key accounting estimates and ensure that there's no bias involved in determining significant assumptions or methodologies when determining the liabilities or assets as a result of those estimates. And the final thing that we do to address this risk is looking for any significant or unusual transactions that may have occurred throughout the year, something outside the normal course of business. And we have many conversations with management throughout the audit process asking these type of questions. Do you know of any significant unusual transaction, something that happened this year that hasn't happened in past years? And if management mentions anything, we pay close attention to those significant unusual transactions, but we're also looking for these type of transactions through the rest of our audit work as well. Besides the one significant risk that we've identified, we have identified some additional areas of focus. Not significant risk, but important balances to the financial statements, large balances recorded on the financial statements. And those audit areas of focus include cash, investments, and debt, leases. The Housing Authority will be going through a new implementation of an accounting standard this year to record leases that meet the criteria onto the balance sheet for the first time. And so we will spend a good amount of time this year as your auditors testing management's process, their accounting entries, and then their disclosures as well related to this accounting pronouncement. Other areas of focus relate to pension and OPEB. Big balances on your financial statements involving actuarial specialists. Your experts as well as my experts will be involved during the audit process. Claims liability, this relates to just litigation matters that are pending or outstanding. Once again, the authority has large balances recorded in the financial statements related to this. So Deloitte performs work around these balances. And again, I know management brings experts to the discussion in determining the amounts to record, and Deloitte brings experts to test the amounts recorded by management. We will test tenant revenues and receivables, your operating revenues. Yes, Mr. Gonzalez?
Before you get any further, I just wanted to ask, being that I'm a novice at a few things. So what was the catalyst that made the leases be put on the audit?
GASB, Governmental Accounting Standards Boards, they're the body that creates new accounting standards or pronouncements. And this was issued, oh gosh, probably 3 years ago now. There's been a couple extensions as far as implementation goes. But it's a group of standard setters that determine what standards governments need to apply. I will say that private companies, those that follow FASB, have also gone through a similar implementation or will be going through a similar implementation here in the next year. The difference between the FASB literature and the GASB literature is that government clients will need to address this lease standard both from a lessor and a lessee perspective. In the FASB, under FASB literature, organizations only had to record leases in which they were the lessee. Here, there's an extra lift that management needs to go through to assess not only the lessee side, but also the lessor side.
Thank you.
You're welcome. So tenant revenues, and then we'll also look at subsidies and grants. So this is really any federal, state, or New York City monies that the Housing Authority receives. And then our last area of focus that I want to highlight relates to environmental pollution and remediation. This is your lead paint remediation and abatement. I know this is a big balance that was recorded a couple of years ago. Each year, we take a look at any changes in these numbers, and we audit new estimates, new assumptions that management may have used during the current year. I do know that there were a couple of changes that are anticipated for this year due to some change in local laws that will likely impact the balance. And so Deloitte will take a look at those estimates again this year. Internal control. We perform what we call a non-integrated audit for the Housing Authority. An integrated audit is one where Deloitte would actually issue a report on internal controls. You typically see that in your public company space. What we do here is a non-integrated audit. So we don't issue a report on internal controls. However, we do look at internal controls. We look at the design, the implementation. In certain cases, we look at the operating effectiveness. And looking at those controls helps us plan our substantive testing or our testing of the actual account balances. And we do this really as part of our planning activities before we get into the actual testing of account balances. And the thought was there, if there's a significant deficiency or material weakness in an internal control, we would have to elevate our level of substantive testing around the account balance.
Sorry. When you deal with that particular issue, is it usually the top echelon of management, or is the entire team included?
Internal control.
Right.
Yeah, we're really talking with the control owners, whoever is in charge of owning the process. So for instance, if the control is to perform a bank reconciliation and then for the bank reconciliation to be reviewed by someone else, we're actually performing walkthroughs, having direct conversations with the preparer of a bank reconciliation and the reviewer of a bank reconciliation. So it's really the control owners. And depending on who the control owner is, it could rise to upper management as well.
Okay, thank you.
I'll hold my questions till later.
It means that we'll look at internal controls, but we won't rely on internal controls. So we will look at the design, we will look at the implementation of controls to plan our audit procedures, but we won't rely on controls to reduce our level of substantive testing. If we find a deficiency in control, we could elevate our level of substantive testing, but we won't lower it.
Well, now I'd like to ask the question. Do you see reports, oh, I turned it off, huh? Sorry. Do you see the reports from the city auditor on this organization?
We do. During our planning process, we receive both internal audit reports that are generated by the NYCHA internal audit team, as well as any relevant reports that would come from the
So
city.
you have seen the one about the doors?
The door, no, I don't, the doors.
There's,
Famous rock group.
Well,
I got a copy in my other role, and it's a report on the condition of the doors to the projects, and it's scathing.
I will say, when we look at all internal control or internal audit reports, we are looking for reports that would impact what we do as financial statement auditors. So we typically don't read every operational internal audit report, but if there's any impact to the financial statement or potential impact to the financial statement, we would consider that.
This is not the internal audit report of this organization. This is the internal audit report of the controller of the city of New York.
Right.
Do you get those?
I do get those, and we read those to the extent they may impact what we do as auditors.
Okay, well, then I'll pursue that whenever you want me to pursue it. If now, tell me. Because I've seen that report. I don't think these two guys have seen that report, because I don't know if it was circulated. But it's a report on the condition of the doors in the projects.
Could you be more specific?
It tells how many of those doors had been smashed. I talked to you about it, Victor.
Yeah, but are you talking about inner doors, stairwell doors, front entrances?
Front entrance doors,
Oh, okay.
and that has to do with maintenance.
I'll have to take a look directly at that report. I don't recall opening that report up. Perhaps the title of it, to me, didn't impact what I was doing as a financial statement auditor, but I can take a look, Mark.
I would hope that any internal report generated by any city agency about this place gets read by you, because you don't know how important it is unless you look at it. And as a member of this audit committee, I found it rather disturbing.
I'll take a look, Mark.
If I may, I think perhaps what's important to consider is that while that report has issues that are operational, those issues don't impact the financial statements. So they don't impact our internal controls, the way we're recording things, whether we are following government standards. So I agree with you. I think that report is important, and I've read it.
But maintenance turns itself into an expense. Now, it may be an insignificant expense, but maintenance, insufficient maintenance, is an issue in terms of what the carrying value of the asset is, at least in the private sector. And in addition to everything else, I would urge that you arrange that whatever the controller's office in the city of New York talks issues about this organization, you see, if nothing else, to make a judgment that you don't need it.
Yeah, I'll take a look, Mark.
I would like to make an additional statement. The city controller has performed a number of audits on NYCHA, which indirectly or directly relate to finance. Question: should the audit committee be allowed to see hard copies of that controller, the city controller audit? That's a
tell you,
question.
they're
That's a
public
question.
documents.
That's a question.
I think all of those reports are public documents, so those are available to all members of the audit committee, all members of the team within NYCHA. They're often circulated within NYCHA. I think if that's something that the audit committee wants us to share formally, I would suspect that we can easily do that in terms of issuing those reports to you as they come in. So I would be.
I would like to see the city controller's audits of NYCHA in the future as a audit committee member, because we have not seen them up to this point. So I would appreciate your sending us a hard copy of that report to the committee members.
We can do that.
Yes, that can be done. Yes, we will do.
And I will say that they have not done an audit that directly impacts finance. So the audits, the internal audits that, the audits that we are talking about really do take into account the operational issues, which I think are also important for the audit committee's context. So I agree with you.
Thank you.
Any other questions or?
Before you get off that page, there's something here about the internal audit function here. You do not plan to use the work of the internal auditors. I take it you review them, though.
Right, Mark, that's what we were talking about just momentarily. We
sorry.
receive the internal audit reports, we read relevant internal audit reports, and if any of the internal audit reports are financial in nature or may impact the financial statements, and if there were any findings in those reports, we may or may not alter our procedures as your external auditor. So what this means is we don't actually use the internal audit staff to help us perform audit procedures.
Is there any interaction between you and the internal audit staff in terms of figuring out what their audit program is?
In the past, we've been given a copy of the internal audit plan, and we would provide any comments or thoughts. Yes.
Good.
Specialists that we plan to use throughout our audit procedures include actuarial specialists, both on the pension, the OPEB, as well as your claims. And then we also will use information technology specialists to look at controls to relevant IT systems. This year, we may or may not have a GASB 87 lease specialist join our team. That is yet to be determined. Moving to the next page, this lays out the reports that will be issued during the year. These reports are very similar to prior year with one exception. This year, there is not a report for NYCHA Public Housing Preservation 2 LLC. It's been communicated to us that there won't be an audit required for that organization. We plan to issue the reports on a similar timeline as in prior years, with June 2023 being the target date, and September being the target date for the issuance of your single audit report on your federal expenditures. The timing of our audits is on the second chart of the page, with planning procedures being performed in November and December. Our team was in the field. We've met with management during November and December, and so the activities related to establishing scope, understanding internal control changes, those have all been started last month and this month. We will return in March to start our year-end testing procedures of account balances, as well as start procedures related to the single audit. And we plan to meet with you next June to communicate our results.
I see the month of November has been discriminated against.
What?
It's not there. I'm just kidding. Sorry.
November's at the front, right?
The front, way at the left.
No, it's not.
Over here, 2022.
I don't see October.
No, it starts at November.
Oh, so yes, I left out October. Yes, sorry.
Come on, stop, I stopped you around.
Peer review report. Under government auditing standards, I'm required to share with this committee a copy of Deloitte and Touche's most recent peer review report. Our peer reviewer is Grant Thornton. And in 2020, Grant issued their peer review report for Deloitte and Touche LLP. And that's on the subsequent pages, 6 and 7. I'm happy to report that Grant Thornton, or Deloitte and Touche has received from Grant Thornton a peer review rating of pass, which is the highest rating a public accounting firm can receive in a peer review. And this year, Deloitte will be going through another peer review with Grant Thornton. Those results I expect will be issued next year sometime.
I'm going to ask you a question I ask every accounting firm. Have you been sanctioned any place in your organization by Peekaboo?
Any place in my organization.
Peekaboo, as you know, publishes these things, and I can't remember whether or not you had some of the firms have problems with an office someplace, and you get your name there. Have you had any of that?
I will have to get back to you, Mark. I don't know that off the top
Just a
of my head.
routine question I ask.
Yeah, I'll have to get back to you. All right, and that concludes my prepared remarks and our audit plan for 2022. Any other questions by the committee members?
One more.
Sure.
Do you interact at all with the monitor?
No, we don't.
He or she doesn't ask to see you at all?
I have not had that request, no.
Okay. I have a partner who was a monitor of something, and his routine was to always talk to the auditors. I guess that doesn't happen here. Okay.
So the monitor, I guess, actually deals primarily with the compliance group, right?
So the monitor technically is allowed to speak to any employee within NYCHA, and I have had conversations with the monitor. They have been very involved in many of our processes, particularly those related to the properties, our budgeting, how we are funding, the pillar areas, how we interact in terms of the compliance agreements. But Jill is right, we have never received a request from the monitor to speak to Deloitte, and if we were to receive that request, we would certainly honor it.
Excuse me. The monitor does speak to the leadership of NYCHA, do they not?
Correct. I've spoken to
And
them.
on a constant basis, they're in certain meetings and does any of that information get back to the NYCHA leadership, our group? Those meetings that they have with the monitor, do we get any feedback from those meetings that will maybe help us following with the procedures and how to move forward with the agreement?
Sure, I can certainly only speak to my specific sort of interactions with the monitor, but I will say that, where the monitor has been involved with me, even on any items that are financial, I certainly do escalate that to the CEO's office, so they're aware where it's appropriate, make sure that other management teams are aware, particularly if something is impacting their areas too. And the monitor also issues public reports. So kind of like the city controller, they issue a report on NYCHA. I believe it's quarterly. That's available publicly. And they also you've probably seen them interacting in the media as well. So they're certainly very public about how we are doing with regard to the agreement. And to the extent that they meet with me or anyone on my team, we make sure that we escalate that so that it's getting to the rest of the organization.
So he's forward, okay. So anything of note, we will hear about.
Certainly, and anything of note would be in their public report.
Thank you.
And looking at the minute, excuse me, one of the issues that was raised at in the September meeting had to do with, I guess, the Deloitte commentary on lead paint, which basically said that there was we had to show in the report that there was an exception or there was some kind of a deficiency there. And so the question that I had raised back in September, which I'm going to raise again, is whether or not, given the fact that there is a HUD agreement for compliance on the lead paint over the next 20 years or whatever, shouldn't there be a waiver on the HUD requirement to have it tested if, in fact, there's been agreements with the monitor, with the HUD, and with everybody else on the lead paint compliance by NYCHA? In other words, why does Deloitte have to put it in its report as an exception when, in fact, everybody knows that it's being dealt with by the monitor, by HUD, by everybody else? Question, shouldn't there be a waiver on the need for Deloitte to test it? Because it's just an additional expense as far as I can see.
So
Just a question.
I'll certainly turn it to Jill because I think it really does have to do with the standards and what's required. I'll let Jill speak as to whether or not there's any flexibility, but my understanding is that there unfortunately is not.
That's right. Deloitte follows strict compliance guidelines that are set forth in the OMB compliance supplement when we test certain federal major programs, this being one of them. And one of the special tests that was laid out in the compliance supplement was worded in a way that the lead paint that was identified needed to be remediated in the current year, else it could result in a finding. Deloitte did have some correspondence with HUD on, this exact topic, Richard, whether or not this needed to be an exception. And they really pointed to level of materiality. And so in our professional judgment, given how material this is to the program, to the financial statements, in our professional judgment, it warranted disclosure as a finding. And so unless the compliance supplement changes this year, or it's an amount that is not so significant or material, I don't see how this finding doesn't recur this year.
Okay, I understand what you're saying, but I still think that HUD, in its wisdom, should not have to require, all that time for the additional testing when everybody knows what the estimates are and what the timeline is and what the requirements are, and that HUD has agreed to it, in fact, through the HUD agreement, and the monitor has agreed to it, in fact. So I don't understand why we're spending additional time and expense to go through an additional test on an issue that's already been tested. Sorry.
No, Mr. Koo, I think your point is very well taken. We are happy to have that conversation with HUD again and raise those very same points. I think from a personal perspective, I don't disagree with you, but I think from a professional perspective, we sort of have to follow their guidance so that we make sure we get clean audits. So I'm happy to have that discussion and press to see if there's any way we could get some flexibility from them.
Thank you. Thank you.
Wouldn't it help you to say that you had this independent audit committee group that doesn't understand why we're being treated this way, so it doesn't come necessarily from you?
Right.
I think that could be helpful, such that you want to sort of put something in writing, even if it's a couple sentences. I could then say, my audit committee continues to ask this question.
May I make a suggestion?
Sure.
Why don't you draft something? Look at it.
Okay, we'll work together offline.
Well, I think that's the point.
We'll work together
Be as
offline.
pointed as you can
Right.
to get something out of this committee.
Right.
I'm happy to work with you, and we can come up with some language that you feel comfortable with.
Good. Thank you very much.
Good point. I did something useful today.
What?
I did something useful.
Well, I've dealt with a lot of bureaucratic mumbo jumbo, and this is. Thank you.
All right, thank you very much. No further question. At this time, we want to entertain a motion to accept the report of Deloitte of the single audit.
So move.
Has been moved.
Second.
A second. All in favor?
Aye.
That's been carried. We want to move on to a discussion of the impact of the new accounting pronouncements on the NYCHA's 2022 financial statements. And we have our financial controller, Vice President, will lead out in this.
Good morning. The purpose of this section is to address the GASBs that have been effective as of 2022. We have 6 of them that are effective in this year. Only the first one, GASB 87, will consume massive resources and require material adjustments on the financial statements. So I think the important point to open this is that management evaluation and documentation and conclusions are all preliminary at this stage. We've done a lot of work in this effort. We started this about a year ago. It's a huge effort with many different tentacles to it. We're drawing it to conclusion, and we've had some preliminary discussions with Deloitte about this, but Deloitte has not had the opportunity to audit or test any of our data yet. So whatever I share with you is, it's subject to change. And that's really the key point there. I'd like to talk about GASB 87 to start. So GASB 87, as Jill said, is a culmination of a lot of thought process and activity over the years of GASB, the FASBs, the IFRS, which is the European standard setting, in order to make leases more transparent. And one of the many concerns with the prior guidance, GASB 62, was that there weren't leases on the balance sheet. There could be long-term obligations, and you could have hundreds of millions or billions of dollars of lease obligations, but there would be nothing on the balance sheet, the statement of net position, to actually demonstrate what the risk was, what the exposure was. There are a lot of other motivations of that, but that's certainly one of the bigger ones. And it's one of those that you're going to see affecting NYCHA's financial statements in 2022. So I think we need to walk through some of the key qualifying characteristics of GASB 87. And there are many, it's very complex. I'm just going to touch on those that we looked at, which directly impact our categorization of leases, determination of whether they were applicable for GASB 87. I think that the first criteria, which is the most important, is the term needs to be greater than 12 months. And that's per paragraph 16, 17, and 18 in GASB 87. The second is that for leases that are cancelable, the maximum term to be used is a non-cancelable period. That's coming from paragraph 16 of GASB 87. In addition, it's required to be an exchange-like transaction, and that's certain mumbo jumbo, which means that it needs to be an arm's length transaction. Both parties to a lease need to give up essentially the same value in order to make this an exchange-like transaction. So that's a key criteria of GASB 87. In addition, variable payments based on future performance of lessees should not be included as per paragraph 22. And contracts that transfer ownership by term end or before term end are not subject to GASB 87 per paragraph 19. So we'll see these repeating themselves as constant themes as we review the portfolio. I'd like to talk a little bit about what this is from a lessee point of view. So GASB 87 qualifying leases now need to be reflected as a lease liability and a right to use asset by taking into account the present value of all future payments. And the present value will be calculated by using NYCHA's incremental borrowing rate. Technically, you could use the implicit rate in the lease, but our leases don't have an implicit rate, so we have to calculate an incremental borrowing rate. So NYCHA determined an incremental borrowing rate using the secured overnight financing rate. This is a measurement which you can find on Bloomberg. It's public issued, publicly available, I should say. It replaced LIBOR as a key measurement. And we're using the swap rates over the term of the lease, plus we're using a spread on top of that. And that spread is somewhat subjective, but it's supposed to be based on a market-based transaction. And we've looked at past equipment lease purchase agreement transactions that NYCHA has entered into over the years. And we use an average spread of those transactions because technically those are written on lease paper. So together with the SOFR, the secured overnight financing rate, plus that's the base rate, plus the spread is our incremental borrowing rate. Now, once again, this is one of the most important variables in determining the value of a lease on the financial statements. It's also one which Deloitte has not had the opportunity to review and bring in their experts. So we've done some calculations. We haven't actually recorded anything yet, but there is a lot of variability depending on where we land on that rate. So as I mentioned, we book a lease liability and a right to use assets. And the right to use assets are amortized or depreciated, depending on the term you like, over the shorter of the lease term or the useful life of the asset. In our case, it's almost always going to be the lease term. These lease payments made to lessors will be allocated between interest, expense, and reduction of the lease liability, similar to how you'd allocate interest and principal on a mortgage or any other kind of loan. So for example, on the prior guidance, a 10-year operating lease with $10 million of rent per year would reflect very simply $10 million of rent expense within the statement of revenues and expenses. But providing this same lease meets the definition of GASB 87, it's going to look totally different. The sample lease will have no rent expense recorded. It will have perhaps $7 to $8 million of amortization, depreciation against a right to use asset. It will have a certain amount of interest expense recorded on a declining basis over the years. It will have a right to use asset. So if we have 10 years at $10 million a year of rent, we may have $70 to $90 million of a right to use asset and a lease liability at inception. That depends on various factors, including the incremental borrowing rate. But it looks very different. I think what you will find is that the aggregate expenses over the term of the lease will be similar. They may be different in each year, and they'll be categorized differently. We had rent expense in the old world. In the new world, we'll have depreciation and interest expense and perhaps a few other expenses. But it's totally different geography as to what we're used to saying. So I think the key point, and we will get into some of the examples of the portfolio a little later, is that NYCHA will have a material impact from this on its financial statements. It will look very different. There'll be some big numbers on there that we haven't seen, and it will change how we view the financial statements. From a lessor point of view, GASB 87 qualifying leases now need to be reflected as a lease receivable and a deferred inflow of resources by taking into account the present value of all future payments. And the deferred inflow of resources will be recognized to revenue in a systematic and rational manner over the lease term. Interest revenue will also be recognized as relates to the discount of lease receivables. So based on management's preliminary analysis, there are no material qualifying leases from a lessor point of view. Really where our exposure and our change in accounting is going to be from a lessee point of view. I think one other key general point to make is that GASB 87 requires that we restate the financial statements if practical. And while I'd like to identify some reasons why we can't do it practically, unfortunately that's not the case. So we will be restating, from the opening balance of January 1, 2021, and 2022 we'll have comparative statements. So now to look at the actual portfolio. We have three major categories of leases from a lessee point of view. The biggest and the most noteworthy are office leases, which has a very material impact. We have 6 office leases over $1.3 billion of future payments, with Long Island City, 90 Church, 250 Broadway, making up 95% of the total there. The present value of assets and liabilities estimated to be recorded are, and this is kind of my most recent calculation, between $700 and $800 million range, but could be as high as $1.1 billion, depending on where we land on the incremental borrowing rate. So I'll repeat, the management has not completed its analysis though, nor has Deloitte had the opportunity to perform the procedures, so these dollars are subject to change. And the way this works is the higher the discount rate, the lower the right to use asset and the lower the liability. So if we had an 8% incremental borrowing rate, it would discount those payments to a much lower right to use asset. If you have no discount rate, you're basically going to be at the same value as the future rent payments. Of course, that's not a reasonable approach, but I'm just giving you kind of a lever there between high and low. So that's our first category of office leases, and that is certainly a material impact. We're going to see some large items, right to use assets and liabilities on our balance sheet for that. The second category is equipment leases from a lessee point of view. And this, we believe, will have a significant but not material impact. We do expect we'll report something on our financial statements. Statistics are still evolving as we review the transactions. There's less than 20 leases. We started off with a subset of hundreds of transactions, and we went through those transactions to determine if they were leases or not, if they were relevant, and we dwindled that down to about 20 at this point, with a total contract value of less than $30 million at last count. And that's not necessarily the balance that will exist as of restatement period, which will probably be lower. But $30 million was the total contract value from the beginning of time. This includes mainly mobile boilers and some office equipment. But the mobile boilers are the big ticket items in there. The PV, the present value of aggregate assets and liabilities, is not expected to be material. It might be 10, 20, 25 million. It'll be something less than de minimis, but I wouldn't say it would be material. But we will probably reflect something on our financial statements when all said and done. The third category, from a lessee point of view, that we looked at was equipment lease purchase agreements. And we determined that this will have no impact. There are 6 transactions supporting energy performance contracts with Bank of America with an outstanding balance of less than $300 million. This is used for financing energy-efficient heating systems, boilers, water heaters, lighting, etc. All transactions have historically been reflected in long-term debt, so we've already had this on the balance sheet for years. While these agreements are in master lease paper, they look and they smell like a loan, like debt. And NYCHA has immediate title to these transactions once the deals are executed. But paragraph 19 of GASB 87, this is considered a purchase type transaction because title transfers before the end of the term. In fact, it transfers at the beginning of the term. So we believe this is not subject to GASB 87. I think the important part of GASB 87 is no stones go unturned. We need to review all transactions and determine whether or not they qualify. And if they do, we need to obviously take action. We need to value it. We need to record it. We need to disclose it. If it's not applicable, we need to document it, document how we drew the conclusion, and store the information for future reference and for our auditors. So before I go on to the lessor point of view, are there any questions on the lessee point of view?
This was a device to employ accountants more, that's all.
Well, I have a large group of valuable staff back there who spent a good amount of their time, working on this, and probably a lot of nights not sleeping because of it.
No, somebody should do a cost-benefit analysis and tell the accounting standards people where to head in.
Well, if I get a vote on that, let me know. Okay, so,
I said, by the way, on one audit committee, we actually wrote a note to them complaining about it. Didn't get any place.
okay, from a lessor point of view, we have 3 to 4 categories as we look at this. The largest is our core business transaction, our tenant leases. We have about 163,000 leases. So, contemplating having to modify our accounting individually in each transaction would have been a nightmare. However, we'll talk a little bit about the nature of these transactions. These leases are recertified each year. They're cancelable by tenant and by NYCHA on a more limited basis with 30 days' notice. As the terms are less than 13 months, the paragraphs 16, 17, and 18, they're not subject to GASB 87. In addition, only non-cancelable periods are included in GASB 87 calculations. And that would be 30 days because these leases can be canceled with 30 days' notice. And lastly, per paragraph 4.10 of the 2021 GASB implementation guide, these public housing leases have been specifically categorized as short-term. So we've concluded that these are short-term, they're outside GASB 87, and that the accounting does not need to change. I will caveat this again, has not been audited. Deloitte and NYCHA have had some conversations on this subject, and I think we landed in the same place, but at the same point, it has not been audited yet. The second category of leases from a lessor point of view are commercial leases, and we believe this will have little to no impact. We have approximately 300 leases. There may be laundromats, storefronts, medical offices, preschools, et cetera, on the ground floor elsewhere of the developments. The one common factor that each of these leases have is that the rent is all below fair market value. In some cases, it's obvious, it's $1, it's $2 a square foot. In other cases, it's less obvious. But NYCHA did engage a third-party consultant who provided fair market values for commercial properties by borough as a measuring stick. And we used that to compare against the rent on these properties and strongly concluded that all but a handful were below fair market value, that they were non-exchange transactions. And with that said, there may be one or two that we're still considering, depending on materiality levels, but we believe that this category, for the most part, is not subject to GASB 87, as they are not exchange-like transactions. Once again, meaning that both parties are not giving up equal value on the transaction. Okay, so the third transaction type is the RAD transactions from a lessor point of view. And we believe that from a lessor point of view that this will have an immaterial impact on our financial statements. Give you a little categorization. We have approximately 25 leases, typically 99-year land leases with accompanying purchase money notes. Most of these leases contain minimal lease payments or have payments that are contingent on the operating results of the lease, of the operating result of the lessee, or the cash flow available from the lessee perspective. Therefore, most of the deals don't meet an exchange-like transaction criteria. Substantially, all these deals have leases or related purchase money notes where payments are contingent on future performance, which causes leases not to be subject to GASB 87. So when I open up this conversation, let me go back a couple of slides. We talked about the key characteristics. We talked about, just give me a second to pull up some notes here. Talked about that Transactions are required to be exchange-like transactions, that variable payments based on future performance of the lessee should not be included, that contracts that transfer ownership by term end are not subject. So these are the kind of conditions that we've seen that have basically exempted these transactions that we've reviewed from GASB 87. So I guess from the third category perspective, which is the RAD PAC transactions, we've concluded that this is not subject to GASB 87 or is immaterial. The last category that we looked at, which is not on your slides, relates to leases with city agencies. We went through a project with the Controller's Office some time ago where we gathered information on their behalf for leases that we have from a lessee or a lessor point of view with city agencies. We came up with approximately 10 leases. All of these have nominal rent values. Some were the lessor, some were the lessee. And given the nominal rent, they don't meet the exchange-like criteria and are not qualifying under GASB 87. So, with that said, we are adopting GASB 87 in 2022. We are restating in 2021. We will have comparative statements. And we're probably 95% through the project at this point in time. We have some nuts and bolts to kind of piece together. And shortly, we'll be having a long discussion with Deloitte relating to some of our detailed assumptions. And the audit will begin. So with that said, I know that's a mouthful. Are there any questions on GASB 87?
I have one question. Oh. One question. It's management's view that from a lessor's point of view, some of the leases are not applicable to GASB 87. Question, who makes the decision to accept management's view? Is that part of the Deloitte audit that will then be, would Deloitte be the ones that determine whether or not this is, that is okay, or?
We will test management assumption that there are no leases that meet criteria for lesser accounting under GASB 87. We'll test that both for accuracy and completeness. And so we will do that as part of our audit work this year.
Second question is the 163,000 leases, is that tenant leases that we're talking about?
Yes, tenant leases.
Okay, but the number of units in NYCHA is a lot more than 163, isn't it?
The 163 count was the count as of the beginning of this year. We may hear of other numbers floating around, which may include all the properties, including those properties that were transacted through PACT previously.
Oh, okay.
You know, when I joined the organization, there were 173,000. 10,000 have dropped off. I think we started off at 177,000 at an earlier stage. So that number is going to continue to decline as we go through the PACT pipeline.
So as I understand it then, NYCHA leases, tenant leases, are no more than 1 year each.
That's correct.
In other words, there's no multi-year contract, leases with tenants.
That's correct, and that's the main driver for the decision.
Okay, all right, thank you.
That just prompted a question. So have we put a limit as to how long do we wait and then take action against, leases that are in arrears? Can anyone answer that?
I don't think we've set a limit. We have certain restrictions at this point in time because of our ERAP program that we filed. We filed claims with the ERAP program in New York State, and while the claims are outstanding, we can't pursue legal action or eviction on those tenants.
Really? Not even when, I thought there was Article 77, is it? Or whatever it is they use to not be, from lack of a better word, prosecuted for being in arrears. So they can just go as long as they can, and we can't do anything about it.
Technically, yes. If you have an outstanding ERAP application as a tenant, we cannot pursue any legal action. And so there are currently 31,330 tenants with outstanding ERAP applications worth about $120 million. But those tenants actually owe closer to $250 million. So even if we were to get the ERAP money, let's say, that would only cover about half of what they owe. But that is all pending. And I think what's important to remember here is we're not really talking about eviction and enforcement. What we're really talking about here is whether these leases, due to how long they are and the parameters around the leases, would require us to record them per GASB 87. So what Jeff is saying is that technically, because the leases have to be renewed every 12 months, right? Tenants go through the recertification process where you come in, you certify your income, et cetera. We, recalculate the rent based on your circumstances. So because of that, it's not long enough to be included in the GASB 87. So I kind of want to, all of that is true, but I just want to bring us back to the GASB. And we will talk more about this issue of tenant arrears in about an hour. Board Member Gonzalez.
Okay, no problem.
You will hear my presentation.
With that said, are there any other questions about GASB 87?
I think God bless Gatsby, may it go away.
But we'd never get to work with Jill.
And I know, Mark, you're waiting on this deferred maintenance GASB to come out at some point in the future, right?
Okay, so we have five other GASBs to discuss. It'll be less painful than the GASB 87. And I'm pleased to say that we do not believe that these will have much, if any, impact on NYCHA in 2022. But we're still obligated to review and document our findings and monitor it to make sure that nothing has changed. So the first one is GASB 91 relating to conduit debt obligations. And this primarily impacts reporting and disclosures for issuers of debt. That's the key. Issuers, to define that such debt is not a liability of the issuer, but is instead a liability of the third-party obligor. So in the case of most of NYCHA's debt, we are the third-party obligor, and someone else, namely HDC, is the issuer. HDC issues debt on behalf of other parties other than NYCHA. NYCHA does not issue debt on behalf of anyone. We're just a third-party obligor. So to make a long story short, this will not impact us. It will impact organizations like HDC. We already have the debt on our balance sheet. So the goal is to ensure that issuers don't have debt on their balance sheet too, which actually belongs to a company that they issue it for. It's kind of like a doubling up concept. So in the end, we don't expect this is going to have much, if any, impact on us. Perhaps we'll make a set-in statement in our debt disclosures, but it's not going to impact the numbers on our financial statements. All right, GASB statement number 92. So this includes a variety of topics which are not applicable or material to NYCHA. I'll give you a couple of examples. Accounting for insurance recoveries relating to public entity risk pools. NYCHA does not participate in any of these. Accounting for asset retirement obligations, AROs, by an acquiring government. NYCHA does not plan on any acquisitions. While NYCHA does have AROs for fuel tanks, underground fuel tanks, no changes required on existing AROs, only for acquisitions of new ones. So the conclusion is that this does not exist, does not have any impact on us, on our financial statements for 2022. Okay, the next one is GASB 93, replacement of interbank offered rates. This addresses the accounting and reporting topics for those debt transactions with variable payments based on LIBOR. or another interbank offered rate. LIBOR is currently being phased out in the marketplace as we speak. As NYCHA's debt is all fixed rate, as a result, NYCHA does not expect any impact from this GASB. Okay, on to GASB 97. So this relates to certain component unit criteria in accounting and reporting for 457 deferred compensation plans. Some of the included topics: certain requirements for reporting of a component unit that doesn't have its own governing board. For example, LLC 1 and LLC 2, along with any potential component units, all have their own governing board, so this is not applicable to NYCHA. This GASB also modifies the applicability of certain component unit criteria as it relates to certain employee benefit plans. The management's interpretation of this is that it relates to fiduciary component units, which NYCHA doesn't have. Our preliminary conclusion, but we still need to look at this more carefully and consult with Deloitte, is that this is not applicable to NYCHA. So that's subject to change once we finish the exercise, but right now we're thinking it's probably not. The third item is establishes the accounting and financial reporting requirements for Section 457 deferred comp plans that meet the definition of a pension plan. We haven't really given this enough time in order to digest it and understand whether it's applicable to us. So we're still evaluating, and we'll have to determine if it's applicable or material for that matter. And the last item on this list, the last of 6, is GASB 99, Omnibus 2022. The reason we have 2 omnibuses is the Omnibus 2020 was delayed because of COVID. It just got pushed back in time. So we have 2 of these coming out in 1 year. Most of the requirements within this are effective in 2023 and 2024, and we will not adopt them until then. But the requirements for 2022 have been evaluated and not expected to have much of any impact on the NYCHA financial statements. These requirements include further guidance on LIBOR. As mentioned earlier, this is not applicable to NYCHA as we have no LIBOR-based transactions. Accounting for the SNAP program, Supplemental Nutrition Assistance Program. This is the prior food stamp program. NYCHA does not administer the remnants of this program, and therefore this is not applicable to NYCHA. Requires certain disclosure of certain non-monetary transactions. NYCHA does not have any applicable transactions. There are some non-exchange transactions, such as grants, which are covered under GASB 33 and are specifically excluded from GASB 99 guidance. So we don't believe we have any transactions that are applicable for this. Another requirement is the pledging of future revenue for a component unit's debt. And while we do pledge future revenue on some of our debt, we don't pledge it for our component units. So we don't believe that's applicable. And the last is clarification of provisions in previous GASBs and terminology updates, which we've determined are relevant, but will only result in minor wording changes, some which have previously been adopted. For example, they're formalizing that the balance sheet should be called the statement of net position. And I thought that was a rule a long time ago. And we've had it in our financial statements for years. And there are some other minor wording changes too. So there might be a few things that we need to tweak in our financial statements, but nothing that it will shake up anyone. So with that said, that completes the review of the GASBs. If there are any questions, I'll be happy to take them. Thank you.
It's as thorough a presentation that I've had at meetings on all this stuff. I congratulate you for putting it.
I'm glad you enjoyed it.
I loved it. So what else?
Okay, no further question. Thanks for Jeff. Wanted to have a motion to just accept this report coming from,
So move.
that's been moved,
Second.
that's been second. All in favor?
Aye.
Aye.
That's been carried. Okay, we have completed our agenda as listed.
Do we want a session just with us or not?
And at this time,
I just have one question for Jill. Has the COVID affected staff availability for the completion of the audit from NYCHA in any way, shape, or form?
No, it has not. Back in March of 2020, when everything shut down, Deloitte quickly stabilized as a firm virtually. And we're set up to do that, right? We travel with our laptops. I mean, we don't have workstations in an office. We have office space, but we don't have assigned workstation. We really do travel to where our clients are. So when COVID struck, we didn't miss a beat. The next day, we were all, working from our home offices. We have many more meetings, Zoom meetings, virtual meetings, Microsoft Teams meetings, both internally and with the client. But completing our audits, I've been doing this now for two and a half years, and
I'm sorry, Jill, but I'm referring to NYCHA staff. Has there been, a problem with getting information?
oh no, not at all, and
Thank you.
yeah, not at all.
You want a motion to adjourn,
and yes, a motion is in order for adjournment.
Mr. Chairman?
Motion to adjourn.
Second. It has been seconded. All in favor?
Second.
Aye.
I have it. Thank you all, everyone, for attending this meeting, and wish you all the best for the Utah season.
Thank you.
And the next meeting is when?
We haven't established a schedule as yet, but it will be circulated early next year,
March?
No schedule yet.
by March.